is your profitability outlook for Indonesia's banking sectors in 2023 as the Financial Services Authority or OJK asks banks to increase provision buffer to anticipate a risk in 2023?
Yeah, thanks for the question. I think our baseline view is that profitability, in fact, will likely to improve further after returning to the pre-pandemic levels already in 2022. This is because we expect banks to reduce credit costs in 2023, having set aside sufficient loan loss reserve, especially for the larger banks in the system. So today, at least for the banks we cover, their loan loss coverage on average is about 240%, which is much higher compared to 180% in 2020. Here, I would also like to highlight that at the same time, any expansion in their net interest margin will be fairly limited despite the central bank's policy rate hike. So, apart from the modest increase in lending rates, as I mentioned earlier, because of, the competition for loans in the market right now, the deposit costs for banks are also rising as liquidity normalizes.
Okay, so back to liquidity topics. In Indonesia, we have a challenge in foreign exchange liquidity, although we have trade surplus more than 30 months. And you said before that the economic prices will stay high. So how do you see this will affect to the liquidity in banking in Indonesia during this year?
Yeah, so I think this year, obviously, we expect liquidity of banks to tighten. Firstly, is in terms of the loan growth, the asset side, and secondly, in terms of the central bank reserve requirement, which have been sort of progressively increased last year. So because of all these reasons, liquidity will definitely tighten from loose condition, and that's why we see deposit costs rising. But with that being said, in terms of the entire banking system liquidity, we think that banks are still having sufficient liquidity. They are still they still have adequate liquidity to maintain their business down there. So it's more of a normalizing from loose conditions rather than tightening and making it harder for banks to operate.
Okay, so how is your point of view in the durability of small or digital banks, which usually doesn't have large capital like big caps banks facing those sentiment in 2023?
Yeah, I think you point out similar view. So in terms of the asset quality of smaller banks, they are typically weaker because they are less advanced in terms of risk management. Their profitability is also lower due to the lack of scale. But that said, we think that they are in a better position to absorb financial risks and sort of compete than 2 years ago because of two key reasons. Number one is that their capital position, in fact, are stronger today. Many small banks have raised equity capital over the past 2 years to meet the 3 trillion minimum capital requirement set out the financial regulator. And number two, in fact, a dozen of them were acquired by investors that include, the largest domestic bank, regional fintech firms, and local conglomerates. And as a result, these banks are more competitive than they were previously, as now they can access more advanced technology and reach a wider customer base through their well-established parents. Now, I think going forward, whether they can really execute the digital strategy is still an unknown. But if you take a step back, Indonesia still has a fairly large unbanked and underserved population that provide opportunity for these digital banks or smaller banks to grow as well.
Okay, so how is the further digitalization and upcoming tech winters? We heard about it lately affects the banking sector in 2023, especially for the small and digital banks.
Yeah, but I think you rightly pointed out that in terms of the funding for these fintech players, it is going to be challenging, especially there is probably some spillover effects coming from some of the failures of global crypto exchanges that could affect sentiments as well. So I think in terms of the fintech and digital bank expansion, they will be less aggressive than we have probably thought in the past. And I think this is something that will be sort of a bit more challenging for them going forward. And at the same time, when we look at the incumbent banks, so in fact, the incumbent banks have strengthened their digitalization over the past few years. In terms of having their own version of super apps, upgrading their backend system, and using open API to connect to digital ecosystem down there. And one thing to highlight as well is that the introduction of real-time retail payment system in the case of Indonesia, BI Fast, as well as the uniform QR code, have in fact sort of boosted the the digital payment capabilities of the incumbents. So I think these are some of the challenges that could face some of the smaller digital banks in Indonesia as well as in the region as well.
Okay, so talking about numbers, so do you have any number from the banking industry in 2023, the outlook, maybe from the growth of loan and NPL and others in projecting of economic growth will be around 5%, more than 5% this year. So how is the number?
Yeah, so in terms of loan growth for Indonesia, we expect it to be around 10 to 12%, which is roughly the same as what has happened last year. And in terms of NPL, we expect the Indonesian banks to be around 3 to 3.5%, which is also fairly stable compared to last year. I think some of the key drivers, as mentioned earlier, is because Indonesia, in terms of the economic growth, will still be strong, and that will be one of the key drivers supporting the loan growth as well as the asset quality down there.
Okay, to wrap up this discussion, so what is the strategy that can be done by the banking industry to boost their performance during this challenging time?
I think right now the Indonesian banks have been doing a lot of digitalization, and digitalization will provide them with benefits in two areas. One is in terms of efficiency, operational efficiency, and two, provide them with the tools to expand into the unbanked and underserved segments. So I think going forward, digitalization will be one of the key strategies that the Indonesian banks will be focusing on, and that will support their growth and their franchise going forward.